You guys should be seeing my screen.
We are, yes.
Cool. Get the toolbar up here too. Alrighty. We are good to go. Good morning, Waleed. How are you? Oh, how is everybody? I'm a little slow this morning, and it's Monday. It's Ides of Monday, so I'm not in a rush to do anything. I have done a few trades, just my usual little warm up. I didn't post anything because they're not significant enough to. I'm up like $100 on a couple of scalps, but I'm just warm up stuff. I'll post them all at the end of the day together. Good morning, good afternoon, good evening, depending on where in the world you might be. And let's see, what else did I want to tell you guys? I think that's it. I'll do a little introduction and we'll talk about the setups, but I'm going to wait a couple minutes before I do it, just so everyone gets situated and their coffee starts to flow into their bloodstream, etc. Also, I am trading on both computers again, thinking about whether I want to have the other computer as part of this. Do we need that today? Yeah, no, let's do that in one of our next sessions. Let's stay on this screen because then I can show you chart-related stuff. On the other computer, I just have domes. I have no charts. I have nothing. No footprint. I have the tape and the domes. And that's really the best way to trade once you get the hang of it. Although on Monday mornings and when we're range exploring, I kind of want to see a little more information. At the open, the internals are really useful. I don't have the internals on that computer. So it's a way to just practice trading the dome. And so what I do is I just turn the screens off on this computer, and it's on the same desk just to the next to it, but that way I can't see any of that stuff. So I just have to trade purely on the price action and the volume. And anywho, we will spend some sessions over there. So just
quick housekeeping. User admin, I sent you a message, but admin, please rename yourself so we know who you are. And also Alf iPad Pro again. I've been messaging you, but I'm not getting a reply. So please rename yourself or tell me who you are so I can do it, or I'm going to have to put you guys in the waiting room until I find out who you are. Thanks.
Yeah, because this is a base, the link can get you in the room, and we're sharing the links with a bunch of people. And so, someone could just pop in and not be in Scalpathon. So we need to know who everybody is for that reason. And the second reason is, as an instructor, I spend a lot of time listening to who says what and who asks what questions. That's how I understand your level of understanding. And so it's really important that I know who everybody is when we're interacting. And, once I do, that's all that matters. So, it's those two reasons: security and effective teaching.
Yep. And eventually I'll get used to these, because I know Zoom is silly about names. It sometimes is hard to get it to remember that you keep changing it. So eventually I'll know who you are too, and I will just rename you when I see you, because I'll know. But until that point, so.
Yes. So please, we have two. Admin, you please rename yourself, Mr. Admin.
Yep. Admin is the one. The other person has renamed themselves, but I didn't catch the renaming, so I'm not sure which one you were, but you have done it. So thank you. But admin, this is your, oh, nope.
No, he's in the waiting room. Yeah.
He must be trying to figure it out and logged out to try to change his name. His or her, I shouldn't assume.
Yeah, well, if you just send JVC a message who you are.
Yep.
Or you can
just
do
message me and I can do it.
You can even do it just to everyone. We don't really care. And then he'll see it and change you. So
exactly.
It's not like we're not going to know once you change your name who you were, right? So anyway, but again, we have had instances where somebody will sign up and they'll give the link to two of their friends and they're trying to split the cost or something. And that's not allowed.
It's okay. It's Alfredo. No problem. All right, Alfredo. Cool. I will rename.
Now we know going forward.
Yeah. I'm guessing you have a device that gets shared between a few different people in your household, because I noticed that you have different names a lot of the time. I know sometimes it's been your daughter and stuff like that. So I don't know.
Yeah, we've had that with a bunch of people. Now. That problem. Yeah. Zoom just remembers the person logged in last or whatever.
Yep.
All right. So we're at 6:19. Let's get busy here. Good Monday morning. Happy Scalpathon. This is our first regular trading hours live session. The purpose of this session is to trade the open. And a lot of people say, oh, you can't trade the open. It's, it's only for professionals. It's too crazy. Well, you know what? I love the open. One of my mentees and a friend who we call Surfer Dude only trades the open, and he knows nothing about the markets. He saw me doing this once on my laptop when we were having a beer, and he said, oh, what is that? I tried to explain it. And this is a guy who does cabinets for a living and is a professional surfer and doesn't know anything about anything financial. And he was like, oh, teach me how to do that. And I was like, oh, this isn't going to go well. Anyway, long story short, that was like 30 years ago now. God, everything is like 30 years ago now. Anyway, and he's been doing it ever since. And the only thing he uses is the 5-second chart. And he trades like he surfs. Oh, here's a good wave. I'll ride this one. and he has it so simple. He only trades ES. He trades 1 to 10 contracts, and he routinely puts up 6 figures every year doing that, and it pays for a lot of his surfing trips. So, there's a lot of good you can do at the open if you get the hang of the open, which is tricky. It takes a lot of practice. The open is hard to trade because it's price discovery. Let's explore that for just a second. Real quick, theory and background on how it works. Just like the reopen on Sunday, when the market is pricing in whatever happened between the Friday close and the Sunday reopen, we're getting another burst of that on the Monday regular trading hours because as I said at the Sunday reopen, there's a huge amount of funds that cannot trade overnight. They only trade during regular trading hours. Equity funds I'm talking about, and they are by far the largest amount of money in the markets. In futures or equities, they are dominant. Think of Vanguard, guys like that. They're just slinging massive amounts of money. They use futures to hedge their positions because the vast majority of them cannot go short. It's against their rules. So the way they protect themselves to the downside is they buy futures or sell futures. Okay, so having said all that, at the open, they come online, or right before it, actually, right about now is when it starts getting busy. I call this the shenanigans session right before the open. It's all often very crazy as people are positioning their orders into the book and people are starting to fill orders. So once we open, we will have price discovery. There's 3 kinds of price action. I've talked about this in many, many sessions. If you've been to any TRG session, you've probably heard this, but if you haven't, if you're just Scalpathon, that's fine. There's 3 kinds of price action. There's price discovery, which is going both ways quickly. That's the market trying to figure out value. Very hard to trade price discovery, but you can trade it at extremes. The opening 5 minutes is a form of price discovery. You'll see that in a second. How we trade it is a little different. The second form of price action is ebb and flow. That's when it's just going back and forth in a range. That stuff is ideal, real easy to scalp. The market has agreed on value and it's just auctioning back and forth. And then the last kind of price action is high momentum. And that's when the market is just going one direction really hard. And that's really obvious when that's happening. It's really different looking than price discovery because price discovery is going both ways. If we're going one way really hard, everybody agrees and they're all going that way. It's that simple. But it's not a trend we're talking about. It's just short-term momentum because, that can change in an instant. And as I said in both of the previous sessions, as a scalper and as a futures trader, trying to do anything with trends is just purely stupid because there rarely are trends in the futures market. There are short-term directional moves. They're typically very sharp. But trending, like look in the last 2 weeks, we had 2 trend days out of 10 days. That's typical. 1 to 2 days out of 10 is, so you can't just trade trends. You'll almost never get them. So it's important to understand you have either price discovery, you have high momentum in one direction, or you have ebb and flow in a range. And they're all different conditions. The open, we will see price discovery right when we open. And the opening 5 setup is a simple trade. If that price discovery starts to resolve into one direction, so, sometimes we go back and forth, sometimes we head fake a little bit, but then it starts to become clear that the market has a priority. It wants to go one way more than it wants to go the other way. And there's a few ways you can feel that. I'll show it to you. And again, it'll take a lot of repetition to get it right, but, we'll do a lot of repetition. So that's basically the setup for the open 5. Then there's another setup 15 minutes in, which will, if we're going to get an opening drive, if we're going to get a really strong move, that setup will catch it. And if not, it'll catch a scalp out of the opening range. Other than that, I don't trade the opening range very much. It's the open 5 momentum, the 15-minute break, and then we do some structural stuff going into the initial balance at the bottom of the first hour. I'll explain all that when we get there. In the meantime, we're pushing down, which is good. Down to go up is an interesting setup today. As Lee said, I agree. But I don't want to try to front run this with the opening coming in 6 minutes. We want to give this some more time. But if you look at EF, it's, kind of working the bottom, and there isn't a clean bottom down here like there is up here, excess. It's really abrupt. And at the moment, that's called a poor weak low in market profile stuff. And if you have a look at the structure, you'll see what's going on down there. Whoops, go away. We're just, we're trading here, and there isn't significant absorption, and we haven't exhausted yet. Whereas if you can see up here, it exhausted and it got absorbed. It was all trading on the ask. That's all the blue. We're trading on the bid, but we're not absorbing, and it's not a clean, exhaustion as it ran out of gas. So this could go down more. That's worth watching. And then when it cleans up the low, that could set up an interesting long back up into the range. So that's interesting. But for the open, I'm not really going to spend too much time thinking about that. I'm going to primarily focus for the first 5 minutes on if there's a dominant direction. And again, if there is, we will join it. I turned off my far left dome here is my PAs and cash accounts for micros. I'm turning that off because I'm not going to trade that right now. We will trade one of these two. Reasonably aggressively, if I get into NQ, MNQ, gives us a lot more room. We're trading 5 lots there, 1 lot's in NQ. So we'll see. On Mondays, you'll hear the difference in my personality between this session and other opening sessions we'll do. I'll be much, much more aggressive on other days. Just Mondays, it's called the Ides of Monday for a reason. The Ides of March, right? Caesar getting stabbed in the back. Even just being out for the day on Sunday and Saturday, the market, you can lose your edge no matter how long you've traded. And it takes a little time to tune back in my experience. And I know a lot of other people that agree with that. I've seen it over and over. So anyway, that's pretty much the intro. We have about 4 more minutes till we open. Mr. Admin. Yeah, he's in the waiting room now. Okay, cool. Yeah, whoever that is, please let us know who you are so we can either let you in or boot you out permanently.
Well, they won't be able to hear you say that, but yeah, they're not.
Yeah, no, I know. I'm saying that just to everybody so we, just so everyone understands. Obviously we can't just let someone sit there. Oh, there's Fitzroy. That you know who that is, right? That's Mike.
Yep.
Yeah. Again, same problem. He knows it. He is renaming the thing. It's constantly going back to that. All right. Anyway, so that's the story on the open here. Again, there's a couple things to watch for the open 5. The first 30 seconds or so, sometimes there's a head fake. So newer traders that are trying to learn the open 5 will try to catch the direction right away. And I will do that sometimes if it's really obvious, but most of the time it's useful to give it 30 seconds to prove that and get a sense of it. And so we'll watch that, and I'll kind of tell you what I'm thinking. Oh, by the way, that's how I do these live sessions around setups. What you're going to hear is just stream of consciousness from me. I'm just going to keep talking, and I'm literally just telling you what I'm thinking. And so what else can we do here? Hang on 1 second. Let me save that. Is the head fake usually on NQ? Okay, good question, because that brings up an important point. None of this is NQ or ES or RTY or YM. This is everything. The indexes right now are well correlated, and as long as they stay that way, then you could say the same thing about any of them. If we get uncorrelated, then that's a little different. But I look primarily for my cues in ES. I watch ES because it's the thickest and the most the biggest number of equities, 500 and whatnot, and at least big equities. The Russell's bigger, but they're smaller equities. And so all the cues are going to come from the behavior of ES. Although sometimes if NQ gets really extended, I'll trade just based on NQ. But remember, every trade I'm going to do will be in NQ or MNQ. I'm not going to trade during the Scalpathon in ES, RTY, or YM, even though you can trade the same idea over there. But it's about the correlation. Zoran is admin. Okay, now we know.
Yes.
All right. Cool. Welcome. Yeah, sorry about that, Zoran. If we don't know who people are, it keeps the room clean and it's easier for me to understand. If admin asks a question, I don't know who that is, but if it's Zoran, I know who you are, and I know a little bit about your background, so I can answer the question accordingly. Okay, so anyway, we're ready to go for the open 5 here. Lock and load. Take a deep breath. And again, so to answer your question specifically, Renaud, the head fake will be on everything, or it's not a head fake. The equities tend to trade reasonably close together right at the open until we see how different equities. Once they open, some instruments will be up, some will down, and that will affect the correlation. But right at the open, we're usually well correlated. Okay, YM just went positive and the rest are negative. So something is good in YM. We'll go look at that later, but that's the point. Okay, let's see. I'm going to switch these guys to 1 minute so we can see the internals real clearly here. All right, so again, the first thing we're looking for at this moment, this is only on the open 5 setup. Do we have a dominant direction? We do. We have a dominant direction of up, but it's not at a great spot. Again, we didn't clean up that low, so I'd rather get long down there than trying to join this right away. So it's a little unclear here. It's not so much a head fake as it is. This is definitely, look at the ranges on the LRC. We are going up, but it just doesn't have any conviction yet. So maybe a nice sweep down that starts to get bought, we'll hop in and we'll buy that. So let's, if AES can build that low out better, I definitely like that. But in the meantime, we're going up. So do we want to join this? Maybe. It just doesn't have enough momentum. Remember, you're always, ooh, there's a good sweep down. Okay, now we're pushing down and there might be a long down here. Let's watch for that. If the up is really the direction, which so far it is, then this is a long right here. So I'm going to nibble it, but I'm willing to get more aggressive. And there we go. It's already profitable. I want to protect this as fast as I can. There we go. Protected and filled at the same time. So I just got 6 ticks out of that. Again, always protect your trade as fast as you can. That was a quick $20, or excuse me, 5 lot. Yeah, not quite. $15. Still going up. So again, the direction's up, but you don't want to just join this because we just had a really good sweep down. Remember sweeps? They're one of our criteria. If there are sweeps and they're unfriendly like this, they're sweeping against us, we've got to be very careful to pick our spots as far as where we're going to enter. So again, it's interesting down here. It's not interesting up here at the moment. If it really gets going and it stops sweeping back down, different ball game. But right now, it's a relatively low risk trade at the lows. Because look at the direction. Is anybody confused? We're going up, all right? We opened here and we're up here, all right? So, slightly positive versus where we were, right before the open. And again, if you have any question, just look at this. We open, we're going up, but there's a whole lot of old levels up here that got sold. So that's why we're seeing that kind of action, and a long looks interesting. Wouldn't try to short this. Never, rule number 1 on the open, never fade it. Never try to fade, go against the opening direction because you'll get run over. Ooh, this will be a perfect spot if I can get a fill down here. There we go. We got it. I had to chase it just a bit, but let's protect this as fast as we can. And let's see. I'm getting a little lag in Zoom. I'm hearing my orders filling in my ear after a good deal after they're happening. I'm going to use a target on this one just because it's a sweet little profit there and it's sweeping back and forth. So, that one was a quick $40 with a 5 lot micro. And again, this is going up, but we're starting to see it selling into the low. There's good absorption here. See, it's all trading on the bid, but that level could go, in which case I'll probably get filled, but I need to come up just a bit. And we can catch another move, but this isn't going down. It's going up, but it's tentative. So that's a decent little long scalp, but I would not be aggressive because it's tentative and it could turn around and decide to start going down. So far, it's not doing that. So this is a potential spot again right here to play long, but I just like it better further down. See if we can catch a fill here. Okay, we got it there. That was a little bit of a chase again. So I'll just use a target like back up here to 0, where all this volume is. That's a reasonable target. Push down, I will buy a little more. And again, we'll take that off faster and then maybe we can catch a runner on this other chunk. So we'll shoot that up here. So again, taking profits very quick on the first piece and then protecting it. Then we can cancel this guy. See how fast I can change my orders? This is the advantage of Jigsaw. You can manipulate orders and move them around by clicking. And that's why I use it over the Sierra chart domes for trading. It's infinitely better than anything like Ninja. That's the advantage of Jigsaw right there. You're seeing, I can just move things so quickly. If you were trying to do this on a chart, forget it. You couldn't drag your orders around. You need to be able to just point to a price and say, that's the price I want, and boom. So anyway, we've got we got $65 on that last one, so that was nice. That was the one I scaled into. It's still a long here, but you just got to be really careful where you try to play. So, and the open 5 is almost over. I give it 7 minutes, and it's 5 minutes right here. And after that, we start looking at the criteria for the opening 15-minute break, which could be really interesting today, considering where we're trading right at the top of the range here. So I don't know if I'm going to play this. I might play this one more time here, but I think I like it a lot further down. I don't like it right here because we've come down here too many times in NQ, and we still don't have a good, strong low in ES. Let's look at the structure there real quickly. Yeah, that's not a very strong bottom down there. We're just kind of back in the middle of the range. So, all right, I think we're going to call it the end of the open 5 here. I might want to go a little, maybe I'll try one more time. Maybe we'll do one more scalp down here, but I'm going to be cautious about it. Let it come get me. You always want to let NQ come get you. You rarely want to chase it. You saw me do it a couple of times for a couple of ticks because I was in a really sweet spot. But other than that, let it come to you. It will if you're in the right spot. Yeah, that was the right spot because it got bought. But all right, let's cancel that order and let's talk about the opening 15. So the open 5 is more or less over. It was it was a decent trade if you got the good entries. See these yellow lines on my chart? That's the opening 15-minute range right now. Obviously, we're not open 15 minutes. It's plotting it as we go. And this setup is really simple. If we have a very well-defined opening 15-minute range like we have like this, whichever side of that it breaks, the odds are really high. And again, we think in bets. We trade odds. The odds are about 87%. And you don't back test that. You can just look it up. And we have people in TRG that do that kind of stuff. And so the odds are really high. If we break that side or that side, we'll at least go a profitable distance. And I use ES as the guide for this. But again, I'm going to trade it in NQ, which is already at the bottom of its range. So it'll be interesting to see if ES goes and retests that low and breaks that way. And then we might find a long further down there. And NQ is kind of already telegraphing that. So I want to see if that breaks to the downside. If it breaks to the upside, it'll be interesting to see if it can get going. That 2250 area we talked about in the odds. I have a question. Do I only use limit orders? No, I do both. And you saw that. I had a limit order on, and I liked the trade anyway, so I hit the market on top of that. I do both. Depends on the conditions. RTY breaking the high. Good eye. And yes, this is why we run all the domes together. See, these three are trying to break the high. ES needs to go to the low first for that to happen, in my opinion. Why do I keep saying that? Let me show you. I'm watching a TPO view on my other screen, and this low is just, it's a poor weak low. That's what those dots mean. And it's just likely to be revisited. It's just not a clean bottom yet. That doesn't mean we're going to do it today or right now, but it's just an artifact worth watching. You'll hear us talk about those poor weak highs, poor weak lows. But again, the movement's to the upside here. I was looking to get long down here again, and we're back at 0-0. So my read is good. This is the open 5 was a long, and it continues to be, but you got to be long from the right spot or you're not going to make any money. And the right spot is the other end of the range. Okay, having said that, I'm going to reset these domes over here. We'll leave the cash and liquidity domes running with all of the volume profile since the session started, and I'll just keep resetting these guys over here as we're looking for absorption at either end. So there's two kinds of correlation, kids. There's the correlation of the session. That's what I'm looking for right over here. Oh, I need to turn on my spotlight. I hear the tick is going to new highs. I hear a little bell when that happens. So that's the equities. Remember, I couldn't show you that on Sunday or yesterday. Or excuse me, yesterday was Sunday. But now you can see this is the tick for the equities, everything going up versus everything going down, one subtracted from the other, it's positive. That's not a huge number, but it's positive. It's turned. And this is the tick for the NASDAQ 100. So this 21 out of 100 are going up, now 9 of them. And this is this is the broad market, the NYSE broad market. This is approximately 3,000. So we're still not overwhelmingly up, but we're better than we were. Okay, the other thing I do is I switch these to 2 minutes once we get open so I can see a little bit more time as we get moving. All right, so to do the opening 15 trade well, again, we have to look at the correlation of the entire market on the session. And right now, YM continues to lead. As Todd said, RTY has turned positive. Now it's leading. I take that back. ES has turned positive. So, this is definitely a bias to the upside, but it's not a real strong one because look at that. We just had a massive sweep down in NQ. And you've seen that. Every time we go up, we get swept down. And so, you just can't be long up here. You got to be long from below if you're going to be playing long. And then, so that's the session correlation. Over here on the right is the instantaneous correlation. We're watching the domes, and these are called ledges because we have not traded up here yet in the regular trading hours, and those ledges keep breaking. So we do have an upside bias. Again, it's just not really strong, and that's the danger. Look at the cheat sheet that we always refer to. Doc's criteria for scalps. It's in the Scalpathon stream. It's also in the pit stream. And that's not it. Elements, here we go. And, time of day, it's RTH open. That's a tricky one. There's the open 5 and the 15. The 15's coming up. Direction, sweeps. That's the problem. We're getting sweeps. So always remember the criteria that we're using to make decisions. I'm going to try to remember one more time to turn on the spotlight. Okay, now it's on. Good. All right, so you can see how, remember I just reset these guys over here, so we've seen the volume since I reset the traded volume. And over here, these have more detail on them because I haven't reset these 4 over here, and I won't if I don't make a mistake. So, that's what these tools do. I can also just reset the real current stuff right here by hitting this little thing right here. So it's useful to look at the volume in a couple of different ways, but that's all we're doing here. There's no indicators for this. It's just, are we getting absorbed up here? We're trying, but we're pushing up. So, it's an interesting long up here somewhere, short because of the weak move up, but we're getting the 15-minute break. So let me go and explain that real fast. So here's the overall internals. We see the tick here for both instruments, but on this one, you can see not only the tick for both instruments, but the advanced decline. And you can see it's improving. We opened minus 400, now it's plus 500. Remember, the advanced decline is everything going up versus everything going down since the last close. The tick is this session right now. So this is what's happening right now. This is the difference from the last close. And then this is also where we start to look at the heat map. Why was YM leading? Is anything particularly strong there? Yeah, it's JP Morgan. Everything else is flat. JP Morgan is pulling the YM up. So that's why the market is getting swept up there because nothing else is going with it. So we want to look for shorts. Same story in the S&P 500. The only thing strong is JP Morgan. So that's very instructive. If we get up to where I might see good absorption, I'm going to try to short this. So definitely up here, maybe higher. But let's see, how the 15-minute break goes. It should break to the upside right now, but you never know. That comes in anytime after 6:45. In other words, anytime after the 15 minutes. So let's see what happens. I'll see if I can fade it. If it really flies through it, we'll fade it a lot more aggressively up here. That's a swarm. I'm not adding to a loser if this fills. I'm saying I really want to be short here, but I'll nibble short here. It's really important you understand that if you're new. There are times my swarms are going to look like adding to loser. That's not possible because I'm doing it in advance. It's not a loser. I want it to get up there. Really have to listen to that because there'll be somebody inevitably that tells me after the 2 weeks, so all you do is add to losers? I mean, that'll happen. And no, we're trading extremes, and the more extreme they get, the more aggressive I'm going to get, unless the market's trending. Is this a trending market right now? Yes or no? No. It's a market that went up off of a low into an area that got sold a whole lot of times. So if it's going to trend, it has a whole lot more proving that it's going to do that. In the meantime, it's fadeable up here. That's simple. You can see the internals are getting weak, and there we go. It just swept down. So fading anywhere up here, you had a 15-point trade. And so now, obviously that's the side to be on up there. Now down toward the low, it's getting interesting as a long again, but it's got to get a lot lower. I want to see it test the bottom of the ES range. And then the equivalent over here will be a really good long entry. So let's see if we can get down there. But, I always like 92 on an early push down, and particularly if there's a high volume node after that, like there is right here, and there was lots of absorption at the low. So same story. Again, I might get run over here. I'm not adding to a loser if I decide to get really aggressive long down here. That's the trade I really like, but the odds are really low. I'm going to get down there. This trade isn't as good. This is like a pair of jacks. This is an ace king. Remember my way of measuring setups? But I'll take a pair of jacks on this. It's a low risk, asymmetric trade. If it blows through this low volume here really aggressively, I'm wrong. But in the meantime, I should be able to catch an extreme here. Also noteworthy, we have the S&P 500 global manufacturing PMI coming out right now. I'm watching economic announcements, ISM at the top of the hour, but there's one due right now, and that could push us down right into my orders, which would be ideal. Because again, news sometimes extends the range, but it rarely changes it dramatically. Also, look, we're getting the 15-minute break right now to the upside in ES. So we definitely want to be looking for longs over here in NQ. But remember, most of the reason it's up is JP Morgan. So you do want to keep an eye on that. If JP Morgan starts to go negative, that could change the entire picture. Remember this? And it's not in the NASDAQ, which is why I'm playing over on the NASDAQ. The NASDAQ is unadulterated by the JP Morgan strength. I'm just looking over here at ES to understand why ES and YM are so strong. It's almost entirely JP Morgan right now. And they're not that strong. I mean, another good set of metrics to keep in your mind is the percent changes since the previous session. So Globex, 24 hours, that's what we're measuring that on. If it's below 1%, it's a rounding error. If it's above 1% in any direction, that's a mild trend. Above 2% is a fairly strong trend. Above 3% in one direction, the market's clearly trending. But that's really unusual. Most days it's rounding errors like this, or it goes up 1% or down 1%. And you got to just understand that's normal ebbing and flowing when it's doing that. There's no trending going on. So get that trending word out of your vocabulary. But it's really clear the open 15 break was a long, and it was a really good one. This happens over and over again. This is a great setup. Here's the top of the 15. You could have nibbled long right in here when this pullback got bought. So call it 91. It's trading 94. That's a quick 3-point scalp. If you watch this setup every morning, it is uncanny how often it's 87%. I mean, I'll tell you how often. 87% of the time that will get you on the right side of the trade. And if the market's going to trend, you'll be in the trade already. Right now, what I'm saying is I think we're going to break up here, but we're seeing good excess here. So the odds that this is going to keep going and trending are really low. It was just a nice scalp. And again, you can see not a price rejector, but it didn't leave any excess up there. No unfinished business or anything. It was fairly clean. Let's put it that way. Okay, let's see. I'll hit some questions. Let's see. So we got the PMI number, and it pushed us back up a little bit, but it's not that exciting. I'm going to continue to try to fade up here, at least till right before the top of the hour when ISM's coming out. Then I might move out of the way, but I still like this spot right here. In fact, I like it where we're at right now too, but I think it's going to blow that ledge. Let's grab it. Missed it. I'm going to try to. Now it's too far away. Never chase these things when they're that quick. That's good trades work right away. That was a perfect short for 6 points, and I just didn't catch it. I wasn't aggressive enough. I'm getting a little bit of a lag in my fills because of Zoom, so I'm hesitant to do market orders right now just because of that. But I should have done one up there, and if it gets up there again and I don't get filled, I will. What we'll do is make that a little more aggressive, and then we can play that way. So. Yeah, it got slammed again. Just here we go. We should get a fill this time because it wants to go up. Look at the tick. It's holding the low. Keep an eye on that. If this turns really positive, then it'll squirt up. Because remember, the equities and look, it traded there again. Missed by one tick. We need Jeff's greatest hits. It actually traded there. And you got to let it come to you because it wants to come up there. It's just being cagey about it. I did get one on. We have one here, but. Oh no, I'm short 4. I'm sorry. Okay. So that makes it hard to manage with a 5 lot. So let me I'll put some protection in there with these. Okay, now we have 2 left. Okay, there we go. And so, okay, now we got 1 left. See over here. And maybe we'll catch a little, no, we got filled. Okay, so I'm going to cancel that. I like nice clean blocks of 5. It filled 4 of them is what happened up there. When it popped up and just missed me, I actually got 4 of my 5. Okay, I see questions over there. I will get to them in just a minute. I'm just trying to stay focused on the setup. Let's cancel these orders and I'll do questions. And now it's squirting up there right when I canceled them. All right, let's get back in line. And I'll answer the questions in just a second. This is the ideal time because we should have some opportunities right before we get that ISM number. Again, right there, it's a short. See where absorption gives you a clue? The volume picks up and it trades down. If it trades on the bid and goes down, that's a great short. If it trades on the bid and goes up, it's a long. And every time we heavily hit the bid up here, it squirts down at least 2 to 6 points. So it's going to break this ledge. And so it's not breaking aggressively. So I do want to fade this, but I want to fade it much more aggressively up here. All right, let me hit the questions real quick and I'll listen to see if those fill. I answered that one, I answered that one, I answered that one. When I use the term ledge, okay, a ledge, Alex, is the edge of the session volume. So wherever that, like right here is the edge, that's a ledge. Sometimes so edge, EDGE, is the edge of a range. A ledge is an edge that's the edge of the session. JVC, please post the link to the glossary. I think those terms are in the glossary. Are they not?
Sure thing. Yes.
Grab this here. Okay, I got 5 at 18. Look at that. It immediately went profitable. Let's throw a target down. I think we're going to go higher, but if it sweeps down, I'll take profits like maybe back to there. Otherwise, I'll try to get longer up here. There we go. See, it swept right into the area that got sold last time, and we picked up a quick 4 points there. All right, let's see. So that's what a ledge is. What you're talking about are inflection points. An inflection point is anything that might cause the market to turn. So a ledge is an inflection point, an edge is an inflection point, unfinished business is an inflection point, previous highs and lows are inflection points, value area high, value area low, those are inflection points. A point of control is nonsense, forget about it. Okay, yeah, the rest of those are all potential inflection points, yeah. But I don't look at them from a chart point of view. An inflection point will reveal itself on the dome in the traded volume by the traded volume. If it just so happens to be at a previous high or low, that's even better. And, again, later on in the session, I'll start looking at that more. Right now, it's all about the price action because we're still in the opening hour, the initial balance. But, that's the purpose of what I showed you over here, looking at the TPOs. Those are previous artifacts, and we're trying to get a fill up here. You know what? I had to chase that with a market order, but it was good to do that. Okay, now we've got 10 on over there. I'm going to go manage that trade instead of explaining this. I'll come back to the questions. So let's put some targets down here, and I'm going to push this up. And here we go. Okay. Remember, we have numbers coming right at the top of the hour, so you've got to be careful. You don't want to get too aggressive. I've only got 15 micros here at the moment. That's nothing. You don't want to get too aggressive right in front of the numbers, but you can see we broke the opening 15-minute range, and we're trending a little bit. We've got some strength. So I'm scalping counter trends. So for that reason, I want to take profits really fast. But the opportunity could be big. So if I can get out of a chunk of this, I might be able to catch a runner back down. The value area high right now, there we go. We got the first one off. The value area high right now is 15. So even just that area is interesting. That's kind of where this target is. But we'll take, a little bit off first. Ooh, that was a nice sweep up. That's favorable. I'm looking to scale this still. So, I like it a lot more further up because it's just further away from the edge of the range and it's more extreme. But in the meantime, I'm managing my risk by taking profits, and I want to try to protect this as fast as you can. You see how I did that? once, it's not going down hard, I'm able to take profits, but I'm being really, really aggressive in profit taking because I'm counter trend. It's not that you can't make money counter trend. You can. You just have to pay attention. See that absorption right there? That's really a good sign, but it's going to blow through it again. So, maybe there, I look for 5 to 10 points if it blows through a ledge. And again, we're seeing absorption over here in ES. It's right near the big fat hole number. So ES is likely to trade up to 0.0. That's the big fat hole number. But in the meantime, up here, I'm catching low risk shorts. And again, it's the idea of this. If you don't understand it, please watch the 3 videos on risk management. The idea is that we're at an extreme, and the more extreme it gets, the more aggressive I can get, as long as the market isn't trending, which it isn't right now. It had a burst of trending behavior, and now it's actually going down. So we're in ebb and flow at the high up here. Okay, remember I said there's 3 kinds of price action? This is high momentum, and it went up. That's high momentum up. We're in ebb and flow at the high, which is usually an interesting short. You just got to be careful. It's not going up anymore. That's why I'm fading up here, although I'm not doing it in ES. I'm doing it in Q, but it's the same thing. See, it overextended a little bit where the range was. See, these are inflection points over here. Alex, because those are places it previously made it up to, and it sold down. Not support or resistance, just previous inflection points, and they tend to repeat themselves. Look at that. The high we just hit is to the tick, this high, and it's just a scotch below that one and that one. So again, you were playing the odds. It's a good place to fade it and try to catch some ticks the other way. You just have to be really risk management oriented, like you saw me be, because you are at the top of a range, and if it keeps going, it could get ugly. So you just have to be mindful of that. But it's clear up there, it wasn't keeping going. It got absorbed, and then on the way down, they just kept hitting the bid, and the bid kept going lower. Remember what I said? If they hit the bid and we go up, that's buyers. If they hit the bid and we go down, that's good selling. So this is clearly a short setup up here. That's all you need to know. And also keep an eye on how the tick of the 2 different equities indexes gives you a good idea when it's running out of gas. Remember, we were really strong, and then now it's gone the other way. Same thing over here. So that can help you, finesse those entries. Because remember, we're a derivative of the equities. And so, we can get out of sync with the equities in the short term, but we can never do it for any length of time, because it's impossible. It's mathematically impossible. Somebody will arbitrage that back to being back in sync, because it's profitable to do that. Okay, there is that the, okay, yeah, that's the glossary. Yeah, if they don't have access to that, please give them access to that.
Yeah, they definitely should now. I double checked it, so should be good.
Yeah, and guys, you should join public streams in, trying to bring it up. Yeah, there's the glossary. And so Ledge should be, okay, why isn't Ledge in the glossary, JBC? Who runs the glossary? Oh, Edge Ledge. Okay, right there. Yeah, they're together.
It's got to be.
Yeah. Okay, there it is. Okay, so anyway, and remember, that's one of our criteria: high volume and low volume nodes, and the edges of the range. That's a key criteria of what we do, and the ledges of the session. Okay, Steve H, how do you know MNQ 197 is a good place to place a short? No, it's not a psychological number. I just explained nauseatingly to me. So please, Steve, what part of that didn't make sense? Absorption, traded into the bid and went down? Or are you asking me why I was just looking roughly at 20? If that's what it was, that's a great question. There's just simply certain areas that NQ and MNQ tend to respect. They're always inflection points. They are the following: 20, and it's not to the tick, it's that area. That's a huge one. 50 is another one. 72, 92, 00, and then 7 to 15 if it blows 00. So those are areas I just watch. They're just places where NQ traders tend to be more aggressive than other places, particularly 92, 00, and 20. When we're trading around 00, it tends to go back and forth from 92 to 20. And that's why you saw me looking to buy 92 and looking to sell 20, if that was your question. Okay, good. Yeah, that's the importance of trying to give me really specific questions. So that was a good one, and I figured it out. But again, guys, in Scalpathon, the more specific you can be, the better I can answer your question. So you had that pretty darn close. So I'll give you credit. So yeah, how would I have asked that to get to really good way to ask that? How do you know the MNQ 1975 is a good place to, why are certain areas of MNQ better places to trade short or long than others? I noticed you like to buy 92 and you like to sell. That would have gotten me right on course. But that was a good enough question. So we'll give you a A- for the question. But anyway, but it's a really good question. A- for format. Okay. And again, when we get really busy and it gets really crazy and, more people ask questions, I'm not picking on you. I'm just trying to make it really clear to everybody. The clearer your question, the faster you'll get a good answer. And the less I'll tease you. You'll notice how this is not an environment in any of my classes for the emotionally unstable individual. I like to make it fun, and I do poke fun at people occasionally, including myself. And so, we like to keep it loose. That's my style. I find, I was trained by IBM to sell and do sales presentations. Whoa, okay, we got our number. There it is. I'm going to look to buy this. I missed it already. It traded, look at this, right to the low 90s. Again, see what I mean? But if it pushes lower, we can probably catch lower down. So let's get an order lower down because the numbers, obviously the market didn't like the numbers initially. If it starts a big sell-off, I'll get run over. But otherwise, I might be able to catch some shorts. So see, I'm just trying to catch an extreme. If it takes out the low here, I'll get a fill. And, there's clearly buyers down here, but that might change. People are kind of pricing in what just happened. Again, let's reset these domes, and I'll leave my cash account domes going for the whole session so you can see how the volume areas fill out and the bid-ask volume. We still didn't make a good enough low in ES. It's better than it was. See, there's a little tail now, but it still needs to go lower. So that supports my idea of trying to get long down there. Remember, good scalping, particularly in my swarming model, is about extremes. Why is that true? That's a quiz question. Here we go. We got filled. Perfect. Look at this. Perfect. It's already profitable. All I got to do is protect it. And I got what I get there. I got 5 points just by sitting down there and waiting. And I'm doing that down here too. Keeps going down. Great. Come get me. But you got to let it come to you. You can't try to buy the order flow because we're in price discovery right now. We're going back and forth really fast. The bias of the session so far was to the upside. So this should resolve ultimately back up in the range up here. The VWAP's all the way up at 5. And that's why, again, nibbling down here makes sense. But if you're too aggressive, if you trade too much size, you'll get the crap kicked out of you. You got to be prepared to scale very slowly and more aggressively the further extreme it gets. On the other hand, if it becomes a trend down, you got to get out of the way or you're just going to keep adding to a loser. That would be adding to a loser. This is not. I mean, every one of these trades has been profitable instantly. So if you're sitting there, well, he's adding to losers, save your breath. That's it. You're completely not understanding the idea here. So the quiz question was, what's asymmetry mean? When I say this is asymmetric down here in the chat, please give me quick, short phrase answers. It's a simple answer. You don't need to write a book. What does it mean that it's asymmetric? By the way, I forgot to mention to this group, JVC, please post this in the Scalpathon. We give awards during our boot camps, and I give at least 2 of them. The student that asks the best questions gets a gift card from Amazon, usually $50, depending on how competitive it was. And I also have the students vote on who was the best co-student, who was the most helpful, friendly, posted the most interesting questions. And we also give that's like a Mr. Congeniality. We also give a gift card for that. So yeah, JVC, please post that. I forgot about that.
Yeah, I did too. I'll post it now.
Yeah, good questions get rewarded, in other words. Okay, Sebastian, how come nobody is answering my quiz question? Sebastian, can you open 2 ladders with Jigsaw for the same instrument? Yeah, I'm doing that right now. I'm trading MNQ in both. These are both MNQ domes. Every dome in Jigsaw is completely independent of everything else in Jigsaw. It can be in a different account. It can be in a different instrument. You can be trading it the other way as long as the accounts let that happen. Jigsaw is totally independent of the action. What does this have to do with volume profile shape? very simply, let me just draw a picture. That's a good question, and it's a simple answer. Can't find the toolbar, of course. There it is. Okay, so let's say this is our volume profile, and a normal volume profile kind of looks like that. Excess at the bottom and the top, and most of the volume's in the middle. This is called a ledge, because if it breaks this or tests it, it's a good opportunity no matter what you're doing, either way. And we'll talk more about that. That's a specific setup. Otherwise, there's edges of the range. Like this would be the edge of the, probably SD1 and SD2 looking at this. So those are edges. These are ledges. And the shape of the profile is very important because sometimes it doesn't look like this. Sometimes it might look like this. And we call that a double D because there's two distributions. There's one here and one here. And this area in the middle is very dangerous because it tends to move through there quickly because it's a low volume node. So these are all volume profile concepts. They're covered, I think there's a little bit on this in the Make Ticks, isn't there, JVC?
Oh, sorry. Sorry, which thing?
On volume profile shapes, that's in Make Ticks, isn't it? Or is it not?
Cannot remember which parts I posted there. It certainly is in our online courses, which if you don't already have them, I can't recommend highly enough.
Yeah, that's what I'm talking about. For people that don't understand volume profile, we talk about volume profile. Yeah.
Yes, we do. We talk about, understand if you go out, if you like Google volume profile, you will find an absolute ocean of crazy depth on all this stuff that really we don't use. We don't need to care about. We keep it really simple and just the stuff that we use.
Yeah, just the edges and ledges and high volume nodes and low volume nodes. That's the bottom line. So hopefully that answered your question, Ryan. If not, give me a follow-up question. Meanwhile, what's going on? Now we're in ebb and flow again. You see how that changes? We had a sharp move down on the news, and now we're back in ebb and flow. Remember what I said? Odds are it's going to push the bottom of the range, and then it's going to trade back into the range, and that's exactly what it did. And remember, our LRCs are what I mean with the short-term range. That's these lines, and that's just doing a regression of the action within those lines. So the longest ones go about an hour, and the next shortest ones are about a half an hour. These are about 5 minutes, and these are about 2 minutes. And all I'm doing is a regression. It's a way of statistically answering the question, what's the best fit of the action? And right now we're in ebb and flow in the middle of the range. We were in ebb and flow at the high up here. Then we had a sharp high momentum move down. It got bought, including by me. And now we're back in ebb and flow in the range. Okay, so Renat, small risk because the place where you're clearly, yes. Okay, only one person took a shot at my asymmetric. That's exactly right. Asymmetry is where you don't know if you're right or wrong. You just know if you're wrong, it's going to be really obvious. And being wrong doesn't mean it makes a lower low. It just means it might do that and then turn right back. It just means overwhelmingly, if you're at the low and you're nibbling long, it has to really get aggressively harder selling for you to be wrong because, it would be obvious. So if I'm like getting long right here, like I just was in MNQ, it would have to trade through me really sharp and hard. And then I'd get out of the way because I said, okay, that spot got sold. But again, it didn't. That's the whole point. And that's why I'm still sitting down here because it's a good asymmetric trade. I don't know what's going to happen, but I know that it's really clear there. It's really obvious. And the trade will work right away or it won't, like you just saw happen. I mean, those trades, if they don't turn profitable right when they get filled or very shortly thereafter, then you're wrong. Or like I was trying to do at the other end of the range when I said, I really like this at 30, but I'll start playing at 20 or at 18. That's slightly different. I'm not saying, I'm going to take that, and if that goes, I'm out of the way. I'm saying I expect it to go lower and I want to get more aggressive, but I may not get the opportunity. And those are two very, very different things. So understand that. And again, I'm going to repeat this stuff over and over and over. Asymmetry. Yeah, it's not in Thinking in Bets. It's although I've gotten it from some other books on statistics. An asymmetric statistical model would be a black swan. So, and again, if you want to understand the volume profile, a better thing to Google than the volume profile is Google a bell-shaped curve. And we have a really good site for that. Was it Math is Fun or something?
Yeah, Math is Fun's got one. There's another one too, which I'm blanking on the name of now, but Math is Fun will have it.
Yep. Yeah, that's a really good, see symmetry. Look at that, see symmetry, that word right there. It's symmetry about the center. And then here's standard deviation. So that's SD1. Remember, I told you that we watch these as extremes. Here's the intraday, okay? And you can see the action of each of the instruments. I've also got the gaps plotted on this. This is my Thinkorswim template. So you can see NQ gap down from the previous close. Then it filled that gap right to the tick. And then it traded back down. And right now we're seeing the initial balance, which is the 15-minute range, which is those yellow lines. And then this blue line down the middle is the VWAP. So these are extremes of the VWAP. That's what the red and the tan and the kind of orange are. So those correspond to standard deviations. The dotted lines are standard deviation 1. This is normal. If we're there, everything is normal. We're in the middle. If we get 2 standard deviations out, which is the orange, we should have about 95%. Again, it's not exact. And if the market's trending, it will go farther than that. But it's a good place to start thinking, is it extreme yet? And then when we get to 3 standard deviations, you're at 99.7%. That is my tan line. And you can see when we get up there, it often reverses here. Okay, it's not a sell signal. You don't say, oh, I'm going to sell SD3. No, that's TA nonsense. Get that out of your crappy head. No. You want to think tabula rasa. When it gets there, it's probably an inflection point. Pay attention. That's what it means. And then I have SD4 plotted as well. And SD4 is 99.9999. If it goes past that, that's a black swan. And a black swan in statistics is when something is just statistically really unlikely. Okay, so there are some things we do in volume profile that are really part of market profile, and that's what Sebastian's asking me right now. And there are some patterns that are, once the day is further along and we have more data, you don't want to do this early in the day. But for example, you can do it, looking at the overnight versus regular trading hours. There's a couple different names for distributions. There's one called a B, and that's when all the volume is at the bottom, either side, depending on which way you have your volume profile tilted. But a B is generally considered to be a long liquidation. There's volume down here because everybody's selling, and it's not going up, so it's not getting bought. And then the other one that people often talk about is a P. And, that'll look like this. And that's the opposite. That's a short liquidation because we came up here and we're playing up here with lots of volume. So those are 2 patterns. That's market profile, which is kind of a more advanced version of volume profile that was developed by Stedelmeier back in the late 70s. And we talk about that a lot, but it's not something we're going to spend a lot of time talking about in Scalpathon. It's in our course material, and it's just guidelines. It's for me, in the way I scalp, it's as I've said over and over, it's really just context. That's all. So anyway, this is the massive ebb and flow. Look at this. We're just drifting very quietly in a range. And one of the reasons we're doing a lot of sessions, regular trading hours during the rookie roast, midday, is when you have this kind of just drifting back and forth behavior, that's where you want to scalp really aggressively with a lot of size. And the reason you can do that there is because the range is really well defined and it's the middle of the day, and it's really unlikely for the ES to break the range in the middle of the day. It just, unless there's news, it almost never happens. It will either establish the high and low at the opening 2 hours or the closing 2 hours. The middle of the day, it's like a 94% chance that it won't break the high or the low unless there's some sort of news that has hit the tape. So that's another. Now I'm going to throw you statistics over and over again, and they're all true, real, we know them. This isn't back testing. This is fact. It's a metric of the market. We have a couple of people in TRG that are real statistics guys. Robert is one of them. And he's constantly running statistical models. If you're a TRG member, you'll see them in the statistics stream. And so, these aren't, I'm not making this stuff up. When we looked at the opening 15-minute break, we looked back and said, if it breaks that for the last 10 years, what are the odds? 87%. And that's not back testing. That's a backwards metric. And again, you don't trade off that, but you can use it to look for a setup like I did today. And it actually gave us two setups today. It gave us the break long, and then we put in the initial balance, or we're about to here. This was its high. We're not quite there yet. We have 15 minutes more. The initial balance is the opening hour. But you could see when we got up there, look at the wave volume. This is why we're looking at the wave volume, which are these little numbers. It kept making higher highs, bright green, until right there at the high. And that was the extreme of the range, right? That's what this LRC is telling us. And right there, it put in an extreme. And then look at the pullback here, 3K, 3K. So the volume equalized and we were in ebb and flow. And then the second it broke that low, it was off to the races. And then we also got the news right here. So again, that's what the LRCs are for. They're not short the high, buy the low. They give you a sense of what the statistical range is at any given moment. So you can pay attention when we get to the edges and you can look for opportunities. Because the good opportunities occur at the edges of a range. And there's three ranges we're looking at: the very short-term range, we're looking at the regular trading hours session range, and we're looking at the Globex, the 24-hour session range. That's called dynamic ranges. And that is something we will talk about quite a bit. If you're in TRG, the Scalping Workshop 2020-2021 has a really good explanation of that. JVC, I am thinking we should share those three videos in Scalpathon. What do you think?
Sure, I can do that.
Can you, grab, so actually there's four. Just grab the whole folder about that from the scalping. You know what? Give them the whole Scalping Workshop 2020. Give them the whole thing. If they want to watch that, that's useful material. So that was 4 classes I did over a period of about 6 months for TRG members. So you guys can review them. That'll be really useful, and it'll explain those concepts. Okay. Oh, absolutely, Sebastian. That's why we're here. That the idea, again, it's gonna feel like you're just overwhelmed with information, and it's because you are. But this information is not like buy my magic indicator and get rich. This is, guess what? This is how you really trade. These are the things you need to pay attention to. So, clear your head, be a tabula rasa, and be a sponge. Also, I got asked about this privately, so I'm going to answer it now. I didn't want to do this before, but I'm going to do it because I'm getting asked this. Yes, I do one-on-one coaching. It's very exclusive. We have to talk for a while for free, you and I, before I'll even consider it. It will be available if you're interested after Scalpathon. I only do a couple of people at a time. Right now, I'm full. I may take a few more on after this. It's a monthly commitment. I don't charge by the hour. I charge by the month. And it's really cheap because I really invest a lot in my students. And that's why, it's exclusive. And, so if you're interested after Scalpathon, send me a private message and we'll chat a bit, but don't do it now. And I just want to let you know what the story is about that because people have asked. So a couple of you, I told a couple of people have already asked me with emails, and that's exactly what I said. Get through Scalpathon and then we'll talk. I'll know you better. You'll know me better. And there's certain people I really click with for coaching, and there's certain people that I am too direct for. I make them cry, and that's no good. So, see if it's a fit. We'll talk. My mission in life, just to be really clear right now, is to change other people's lives with this stuff. That's what I want to do. I don't need the money. I mean, I'm not extraordinarily wealthy, but I'm fine. And, I have a lot of health issues. I probably won't live that long anyway. So, one of the things that I learned when I was a trainer is that it's really, really cool when you can teach something to somebody and they get it. I mean, I always loved that. I taught community college. I've taught at the universities. I've taught adult education at universities. And I just love teaching. And you probably can hear that, right? So my point is, and there's a couple of people in TRG that will echo this because it's them. They started out not being able to make money in the markets, and now I'm watching them withdraw money from Apex and from Lilu. And I got to tell you, that makes my year seeing that, because, being a competent, consistently profitable trader is a ticket to freedom. If you have that, you can live anywhere in the world you want and do whatever you want and then trade. If you can get good and consistent and disciplined. And so seeing people doing that, is just really, it makes my everything. It's a really cool thing for me because, I spent 50 years doing this and I know it was a real struggle. So any way I can help you get there, that's what it's about. So, when I coach people, I I invest a lot in them, and I get really emotionally invested. And if you're one of the people I'm coaching, you understand that. And if you're not, that's something to think about, and we can talk if you're interested. But again, I'm not doing a big pitch for it because if 10 of you said, yeah, I want to be coached, I can't, sorry. I might have room for one, maybe two, going into June. So we'll see. All right. I've never made you cry. Well, thank you, Donna. I love having you in my sessions. You always give good feedback and comments. And I have made other people cry. I've even made men cry, which blew my mind, but it has happened. I don't think I'm that direct, but I guess I can be. I don't know. Oh, let's see. Thank you. I try hard. I also have an interesting life background, which comes out in the way I teach. And the TRG people pretty much know it. And if you watch some of the recordings from the workshop in 2019, you probably have heard some of this. But hang on one second. I'm just watching this price right here. So the next interesting time is the bottom of the hour, and we're not there yet. That's the initial balance. We're still establishing the initial balance. And then, sometimes, again, if we push down here, I am going to look for longs. I do have an order down there still. Let's go ahead and put a few more further down. I like it right on this ledge. So it's unusual I put an order right on a ledge, but I'm going to do that. So, all right. Anyway, so real quick, brief, I told you guys about my trading background at the introduction session for the Scalpathon. Sorry, I'm burping here. I'm getting some water. My life experience is also kind of interesting, at least, from a different things point of view. I grew up in an area that was kind of affluent. My father was a toy inventor and an executive at Mattel Toys, but he never graduated from college, and he was kind of an entrepreneur and a scrappy guy, And so I grew up in this wealthy area, but my father, you want a car? My neighbor got a Porsche for his 16th birthday. And my dad says, go get a job, save your money, and get a car. So I did, and I actually started a business. I renovated mini bikes, and I bought my motorcycles with the money from that. I raced motocross in my teens. And not quite professionally, but I had a minor sponsorship from a major motorcycle maker, and they gave me bikes and paid for some of my expenses. And I was basically a test dummy for some of the other people on that team. If you're around in the mid 70s or early to mid 70s, and you remember if you were a motocross guy, some of the hot shots at Team Suzuki, Joël Robert, people like that. That I had some interaction with those guys. I was the test dummy for some of their equipment, so it was fun. 125 class, which is not where they were, but that was what I did. Anyway, so good push down here. Let's see if we can get a fill. It's coming to me. Notice how the market, the ticks are really aggressive here. So the equities are selling off. Yeah, I still like it there. Let's see. Lots of this trading into the bid. Okay, there's a breakdown of the bid right there. So we're still going down. This is probably going to fill, and that's okay. But I think I'm going to get the middle one out of the way. And let's see if it really breaks that low hard. Well, this is a 1+1. I'm willing to take one right here and then another chunk further down if it gets down there. So this is not a swarm setup. It's a 1+1. And we'll put a target up because we're counter trend. And boom, that was a $50 trade. And how long were we in that trade? We were in that trade for 1 second. That's how it barely measured an elapsed time. My average amount of time in a trade, by the way, is about 30 seconds. But sometimes I'll be in a trade for maybe as many as 3 to 5 minutes, but it's really unusual. They usually work like that. Good trades work right away. Anyway, so I raced motocross, and I also raced C-class sports cars when I got a little older. Went to UCLA as an undergrad and grad student in business. Started a couple of businesses at UCLA, t-shirt business that did well. I sold that, went to work for IBM. And I did a lot of training at IBM. I was a salesman, but I did sales training as well. And then I jumped over to a software startup in the early 80s, and I never looked back. That was the beginning of my startup career, and I've been kind of doing startups ever since. I did work for Microsoft from 2008 to 2015 as a field training guy doing training trainers. And again, and in the middle, So I'm telling you all this for a reason as we're kind of waiting for another trade here. Um, in the middle, because of the motocross racing and the car racing, I broke a lot of bones, and I spent a lot of time in hospitals. When I was 27 years old, not because of that, just because of a genetic defect in a blood vessel in my brain, I had a stroke. I had a migraine and it caused a stroke. So at 27, I pretty much almost died. I spent a month in the hospital at UCLA, and that was a life-changing experience for me. I had studied Asian philosophy when I was in college. I have a minor in Asian philosophy, Zen Buddhism, Taoism, Japanese Buddhism, a little bit of Indian Buddhism, and then economics. And so I kind of became more philosophical and kind of a minimalist after that. I left LA. I bought a house out in the desert. I kind of changed my life a little bit because I realized that life was short. That near-death experiences will do that. Anyway, from that point forward, there were some interesting times. I won't give you my whole life story, but in the mid '90s, well, first of all, I lived in Europe. I've traveled all over the world. I've lived in 150 countries, and I was married to a British woman who was a BBC producer. So we traveled all over Europe. She spoke 5 languages, so we spent a lot of time in European countries. It was fun. I don't speak the languages. I understand a little Mandarin, a little Spanish. That's about it. I program fairly well in a few languages. But anyway, in that middle time, after I got divorced, I was running a training center in Atlanta, a Microsoft MCSE training center. And because of the health issues, I actually had a big financial breakdown. I had a bankruptcy. I spent millions of dollars on healthcare. And before Obamacare came along, I maxed out 2 different policies, which means, that it has a $2 million limit, they pay it, and after that, it's on you. Well, I went through a lot of money, 7 digits, with health issues from that point after the stroke on. So at one point, I was living in my car, and I was going to trade shows in a couple of industries selling stuff. And so I have a very interesting balanced background. I've, grown up in reasonable amount of privilege. I live a very privileged life now, and I'm grateful for it. But, if you've struggled, trust me, I've been there. I'm not kidding when I say I lived in my car. I literally lived in my car in the South for 2 years. And I actually liked it. It was fun. It was, that's my view of life. You can learn a lot by anything. So, let's see. 600 and 300 LRCs are flat. Good for swarming. Not yet. Why not, Renaud? That's true, but we're not there. And by the way, it's not well, we'll come back to that. So, too early in the session. Exactly. Yeah, we're not in the, exactly. David got it too. We're not in the rookie roast. We're still waiting for the initial balance. What swarming means, you have to watch the 3 videos I assigned as prerequisites, Waleed. I'm not even going to answer that. There's 3 videos that will tell you in detail what swarming is. Don't worry, we'll talk about it more, but you can't just ask me what's swarming. You have to watch those 3 videos. We will talk about it extensively, and you'll see me do it. I've been describing it all morning. Swarming, I have 3 trades set up, risk management models. We'll talk about them next Saturday. 3 different ways I manage risk, okay? You know what I'm going to do? It's quiet enough. I'm going to show you an example real quickly. So I'm kind of answering your question, Waleed, but I'm not taking away the fact that you have to do that assignment. Because if you ask about it without doing that, I'm going to just keep telling you to do that because it's important to do the prerequisites. It saves us all time, and it's helpful for the students. Okay, so basically there's 3 approaches to a trade to me. And swarming is particularly effective at a ledge. So let's say this is the ledge up here, okay? And I was looking to trade that. Well, there's always a ledge almost always breaks, and we'll talk about this. So there's always, long trade this way. And if the market is strong enough, that's worth doing, getting long anywhere down in here on the way to a ledge break. And I'll discuss that setup. That one is a little bit easier to learn, but it's not as precise as the other one, which is looking to fade it up here somewhere after it breaks. And so in a swarm situation, what I will do, and I'm going to kind of move this over here so I can explain. Let's say this is the ledge top right here. And so, okay, so we're right here. This is the ledge. I'm going to get rid of this one because I need more room here. So, okay. All right, so swarming, so basically there's three risk approaches. One of them is to say, okay, I want to fade this up here, and I just showed you this a minute ago. I'm going to put one order here, and I'm going to put an equal size order here. This is a 1+1. I'd really like to get short here. It's probably not going to get up there, so I'll go ahead and fade here. And if it does get up there, I'll be short right here, and the odds are really good it's going to revisit the top of a range if it does that, if it overextends and starts pulling back. So that's a decent setup. I don't do 1+1s very often. It's my lowest risk approach to a trade, particularly a fade trade, which is where I do the most aggressive trades. Okay, so how else might this play out? Well, when I swarm it, what I'm doing is just real simple. I'm saying I really want to be short, but this market could go, based on the action and based on, how far it's come and based on whatever the range is. Today, the range is relatively small. In NQ, it's only 90 points. Sometimes it'll be 300, in which case you got to give it more room to do this. But let's say it's going to break this way, and I want to get short up here somewhere. I'm fading this ledge break. A swarm would be, well, you know what? I'll put on 5 right here, and I'll say, you know what? It's going to go higher, but at least I can get in the trade and, start scaling into it. When we get to the next level I like, I'll put on 10. Because what I'm going to do is the more extreme it gets, the more exponentially I'm going to scale into it. Up here, I might put on 40. And so if I've started here, up here, I've got 55 now, but I'm much more weighted to here. So even if we don't go back into the range, even if it just pulls back a little bit, and you saw me do this as well a little while ago when I did one of the fades, I scaled into it this way. And so again, I'm not scaling into a loser of being short here. I really want to be short here, but it may not get there. The odds are against me. So along the way, I'm going to get exponentially more aggressive. Now, if you try to do this when the market is trending up, you will get slaughtered. So, swarming takes a long time to practice. It's a simple idea, but watch the videos and you'll understand a little more of the math around it and the idea, and then I'll show you examples of it. And then when we get to risk management next Saturday, I will go into a lot more detail. But new people always say, well, you're just adding to losers. You're just scaling into every trade. No, it's a very specific, mathematically appropriate way, statistically appropriate way to fade. What was the word I just used a few minutes ago? An asymmetric edge. Here we go again. We're down here again. Let's watch the traded volume. I'm looking for longs down here, but I want it to be lower. 82 is often an entry. We'll grab one there, but I think 72 is much more interesting. So down there, we'll look for double. Meanwhile, this trade got profitable up there. I wasn't even paying attention. But, I could put a target up and just say, all right, give me 25 bucks. There it is, 25 bucks. I treat domes like ATMs. Where can I walk up to the dome, press a button, and a bill spits out? If it's a $50 bill, $20 bill, $10 bill, $500 bill, if I'm over here in NQ, whatever. That's all we're doing here. I'm watching the very short-term volume, and I'm playing it. That's all I'm doing. You can do this really aggressively during the rookie roast, which is why we have classes during the rookie roast coming up. But at the opening right now, we just broke the initial balance. So this is probably going to keep going down. This is our initial balance break. We're getting it right now. Oh, no, we're not. We've been lower in ES. I'm sorry. We're getting it in NQ. So yeah, NQ is breaking its initial balance right here. See? That's the low, that blue line. So all I'm basically doing is fading the initial balance low in NQ because we're nowhere near it in ES. It's all the way down here in ES. And again, look at the internals. When they get strength, now this is 31, it was minus 70 a minute ago. That again is a good reason to join absorption at the low because the equities are turning and the futures will mirror the equities more or less, as I've said. And you can see the bigger picture here on both of them with the advanced decline also improving, not dramatically, but a decent amount over here in the broader market as well. Okay, there was something else I was going to show you. Oh, crap, I still have a trade on. Oh, okay, well, let's see here. Let's flatten that out. Rhythmic left. I'm copying to one of my cash accounts, and Rhythmic left an order on, which it does now and then. I just looked over to the Dome, or to the Rhythmic Pro window, and I see a trade running over there. I'm like, oops. Anyway, So we'll have one loser on our. There was a $17 loser because I didn't realize that was still on. That happens sometimes. I'm going to turn my copier off. I forgot I had it on this morning, so I'm copying these accounts that I'm trading into some of my cash accounts. So anyway, let's see. Okay, we covered everything. Good. All right, this is where we wrap up. And again, I start asking if people have questions. So Burning Desires coming up now. I want to go back to the schedule and just be really clear. This is a really good time to trade right now. We're going to go into the rookie roast, and this looks like it's going to be a range-bound day. But having said that, remember, we have sessions just for the rookie roast coming up. And let's see, where is that, Jeffrey? Class schedule, there it is. So we're going to do a rookie roast session tomorrow. And that'll probably be a little bit even more calm. But and then we have another one down here on next Tuesday. So, it's tradable. I could continue, we could keep talking, but I'm going to conserve energy. And so I'm going to wrap it up here. So let me ask again, Burning Desires, final questions. Interesting stuff. Many thanks. You're welcome. Okay. Yes. All right. I don't see any other questions or comments. Thank you, everybody. I appreciate it. I hope you learned something. Again, I realize it's a lot of material. When the video is up, it always will be helpful, no matter how much of this you know. I mean, ask any of our long-term TRG members. They always go back and review the videos. And particularly with this much detail, if you're new, that's worth doing. So JVC will get the videos up as fast as humanly possible, subject to Zoom and Vimeo rendering. And other than that, I don't see any other questions. Mr. JVC.
I even go back and revisit these videos, and I not only attend every session live, I do the editing, so I see them more than anyone.
Yes,
it's worth it.
Absolutely. Oh, guess what? I just got an email from Lilu. I passed another one of the bundles. I love these bundles with Lilu. I mean, I've passed a whole bunch of them now, and I'm almost back at the limit of the number of PAs they'll let me have. The bundle is such a clever idea. Bless his heart, Chris. I mean, he works hard. That is his best idea.
I'm surprised no one's knocked it off.
Yeah. Well, Apex is stable, but they probably, we're not going to copy Lilu. We're the leader. But you know what?
Probably.
I think the bundle is the best idea out there. It's like giving free resets, but it's all glued together. The only trouble with the bundles, again, is it's really hard to keep track of all the account numbers in, written and whatnot.
That's messy.
It is messy. All right, guys. Thank you. We will see you. Let's see our next session. I believe look again. I think it's tomorrow. The one I just teased, the rookie roast. Yes, that's our next session. So if you haven't watched the videos, make sure you do. If you haven't taken a look at Thinking in Bets, make sure you do. That's the book. Annie Duke's book, great book. And other than that, I don't have anything else. So we'll go ahead and wrap up here. Thank you, everybody. Thank you, JVC.
See you tomorrow. Yep.
Bye-bye. See you later. Bye-bye.